Good morning, everybody. Today I'm going to share with you 5 stocks that you definitely want to hold in your portfolio in 2021. Let's go. Continue creating our portfolio for 2021. We have a long-term, mid-term, and a speculative part of our portfolio. Previously, I made a video about the long part of our portfolio, what ETF we should buy that make us rich. And if you don't know what the ETF is, make sure to check this video out. Today, I'm giving away 5 best stocks to hold in our midterm portfolio, something that we will hold for the next 1 to 3 years. 5 different companies, 5 different industries. I will go through pros and cons, and you will make a decision, invest your money or not. As always, to make sure that you understand the purpose of this video, it's not the financial recommendation. I'm just a random dude from the YouTube that shares my personal opinion. First of all, just want to say that all of these companies just smashed earnings expectations. If you don't know what it is, well, all companies have to report quarterly or every 3 months about their earnings, income and revenue, and that's how we can analyze a company. If it's a value company, it's a growth company, what's going to happen with the future of its company, real value of its shares. This is called fundamental analysis. Probably one of the most important indicator of fundamental analysis, PE ratio, which is a price per earnings. That's how we can analyze a real value of its shares, if it's overvalued or undervalued. But we're gonna cover this in a special video, how to analyze the company, about fundamental analysis. Just wanna say that all of these companies that I'm gonna give you away, except only one, smashed earnings expectations. So let's start with the company number 1. You probably know this company even better than me, Alibaba, ticker symbol BABA. E-commerce platform. To make it super simple, it's kind of the Amazon but Chinese one, and probably the e-commerce business benefited the most from the pandemic, that everyone's sitting at home and have to buy stuff remotely. But what makes Alibaba way more interesting than the Amazon? Well, let's start with the pros. Number 1, it's a price. Peak was at about $317 a share, a low was about $215 a share. From the IPO, since the IPO, the Alibaba has tripled the share price, which goes in line with the company's growth. Business has grown 30% just this year. Cloud platform grow 60% just this year. Customers growing, revenues growing. Company beats expectations every single time. Absolutely great company. Free cash flow, really important. Baba has about 30 billion compared to the market cap at about $700 billion. PE stands at about 28. If you look at Amazon, free cash flow 40 billion compared to the market cap at about $1.7 trillion. PE ratio stands at about 80. So Amazon 3 times more expensive than the Alibaba by the indicators. Price target, the current price $262 a share. Citigroup has a new target price for Alibaba at about $400 a share, which is the highest price target right now. But if you compare all the price target from all investment banks, on average we can expect 30% upside. So we have fast growing business, profitability breaks all records, 30-40% year over year, 42% margin, absolutely amazing result. 3 times cheaper than the Amazon. A new price target at about $400 a share, or 30% upside. And finally, China will become the first economy by 2028. And about the China, well, that's the main con of this company. Chinese government and anti-monopoly acts against the Jack Ma and Alibaba. There's a lot of pressure on the company right now, but perhaps the worst is over. Stock number 2, electric vehicles. We can't go without it, especially after Tesla's success in 2020 that soared more than 1,000%. But in my opinion, the best stock that we can focus on right now is General Motors, and I'm gonna explain you why. But let's start with the main competitors. Obviously, number 1 is Tesla Tesla, absolute beast on the electric vehicle market right now. Showed to be profitable 4 quarters in a row. Then we expect a new 25,000 Tesla model, and finally, apart from electric vehicle cars, they producing solar panels and batteries. So it's a huge business. It's a future company, and because a lot of people realize that the price soared more than 1,000% from the March, and that's the main problem for the Tesla, because the valuation is so high, the stock price is so high, the PE ratio 1,300. I mean, this is insane. Obviously, people who pay that price right now are paying for the future. That price would be in 5, maybe 7 years. But as of right now, I don't see that it's gonna double in 2021. I'm not saying it's gonna go down, but don't expect continue growth like we've seen in 2020. Company number 2, Apple. Why Apple? Because by 2024 they plan to release electric vehicle. They own electric vehicle. We don't know a lot of details about that just yet, but when it comes to the stock and the Apple itself, absolutely great company, the best company in the world, the most profitable company in the world. It's a reliable company with low volatility, but the main problem for Apple, because it's the largest company in the world, the market cap for Apple is $2.3 trillion. So if you want to make even 20% of gain, that means Apple has to, we have to pump in the Apple about $500 billion, which is something, some company like Alibaba, for example. So that's, I see the main problem. I mean, it's still gonna go up, maybe 10%, but don't expect to double, maybe triple your money by investing in Apple. And that's exactly why we have to find somewhere, something in the middle that still have a huge potential to go up. And GM looks to me really attractive right now. First of all, autonomous cruise EV startup takes about half of the overall market cap of General Motors. By 2022, they plan to release new electric vehicle cars. 3, BrightDrop EV assisted delivery startup. FedEx, for example, one of the loyal customers. And finally, if we compare the Tesla with GM, fundamentally GM is way more attractive. By looking at the market cap compared to revenue and income, even the margin is bigger. So way more interesting in GM right now, especially when they focus a lot on electric vehicles. But the main con of GM, but not only GM, all electric vehicle company and basically automakers, they don't have a free cash flow, which is really important for the company that allows them to buy back shares, pay dividends, and etc. The problem number 2, the stock price is already overvalued right now, but compared to the Tesla and NIO, for example, not that much. So the current price is $56 a share, and the target price right now is $80 a share, which gives us upside in about 30%. Nice. Let's move on. Stock number 3, AMD or Advanced Micro Devices. Absolute beast on the market in production of processors, growing revenue and income year over year. So the main competitor is Intel, but the Intel has a way weaker processors, and they probably win only in a game industry, and everything else. AMD processors way better than Intel. But the problem for AMD, because a lot of people realize that this is the future company and probably there is no other main competitors for AMD right now. The stock price is already high, but pretty much the same with the Tesla. If you believe in a company, if you want to invest in a 3-5 year time, right now the current price $102 a share. The target price is $162, which gives us upside in about 60%. Really nice. Number 4, the company that I'm huge believer in is PayPal. First of all, when it comes to the pros, well, it's the most innovative fintech company in the world. Probably the main competitors is only Apple Pay and Square. Number 2, the growing revenue and income year over year. Recently we beat earnings expectations again. 3, basically the main reason why I bought a PayPal after the news that they allowing customers to trade bitcoins, to buy and sell bitcoins and cryptocurrencies. I think it's really smart way to develop. And by the way, about development and research, they invested a huge amount of money in new technologies and innovations and development. And finally, come on, that's the most popular payment method in the world. The current price, that's why I love this company right now so much, because it's undervalued, and this is so rare on the current market right now. The current price $282 a share, and the target price $375 a share. Amazing company, undervalued company. Go buy PayPal right now, you're not gonna regret. Number 5, well, that's gonna be a little bit speculative one. Well, not a little bit, because, well, first of all, this company is actually losing money. It's not profitable, which is really, really bad. But this is the investment in the future. I'm talking about Virgin Galactic or space. Well, let's start with the pros. Well, first of all, this is the only one space company that actually went public that you can buy shares. If you look at the main competitors, the SpaceX of Elon Musk and Blue Origin of Jeff Bezos, they still remain in private. Huge prospect of hype in the next years, like we saw in electric vehicles. I think the space industry and companies are going to be more and more popular, because that's inevitably going to lead us to the future that everyone wants and everyone dreams about. Then 1 of 3 test flights have already been performed. We have a new test flights coming from February 13, and hopefully by the end of 2021 this company start making revenue, start bringing some customers, and start making money. That's the main goal for 2021, and if they're gonna accomplish that, trust me, this stock is gonna 5x or maybe 10x. About the cons, well, it's really hard to analyze real value of the stock price right now fundamentally, because the company is losing money, it's not bringing revenue. Year over year, the company is burning millions and hundreds of millions of dollars. So by investing in this company, you're looking to invest in the future, obviously investing in the space tourism, in a space company that eventually will gonna be game-changing for the planet and humanity itself. And problem number 2, the stock price soared a lot on the good news and expectations. But the problem is, if something goes wrong during these test flights, if, I don't know, rocket is gonna blow up, the same is gonna happen with the stock price. Right now the stock price $56 a share. It may easily go to $70 a share, which gives us upside and about 30%. But if something goes wrong, I would pick up even more shares of this company when it's gonna be $37 a share. So you'll see, make your decision whether buy this company right now or wait and buy for a cheaper price. So I think all of those 5 companies are really great, and I try to create the list not only from the random companies, but select different industries. We have e-commerce platforms, we have electric vehicle, we have technology company, financial company, and space company. Brilliant choices. You can add some of these companies in your mid-term portfolio. What do I have right now? From all of these companies, I do have a PayPal, Virgin Galactic, and a Tesla. Very soon I'm gonna add more of GM and Alibaba and AMD, and let's see how they're gonna perform in 2021. If you have some advices or your opinion about the stocks, which stocks is gonna be beast of the market in 2021, you can leave the comment below. And by the way, if you like what I'm doing here, please subscribe and click the notification bell that you not miss my next video. And if you like this video, just smash this like button underneath. I'll be highly appreciated for you. Well, have a nice day, and may the force be with you.